This is the video for the tax return problem from Chapter 12. So it's actually assigned in Cengage, but I want you to work it out on the actual form from the IRS. So go to irs.gov, type in in the search, type in Form 1120S, and then you want the one that has the form. Okay, I already opened it up, so it's right here. And then you're also going to want to search and find the Schedule K1 for Form 1120S. It is not part of this original form, so you're going to have to find it as well. Okay. All right, then I just pulled open the book to get the numbers. And can I see that? Let's see. Yes, I can. Okay, so we can do it like that. All right, now you just need to fill out the form. Complete the form. Maybe I should go ahead and make this a half a screen too. All right, so the S-election effective date, let's just group at the top. John Parsons and George Smith are 70% and 30% owners, respectively, of Premium Incorporated, a candy company located at blah, blah, blah. Premium's S-election was made on January 15th of 2012, its date of incorporation. The following information was taken from the company's 2019 income statement. So we have, the book income statement and the items that are on it. And we have a balance sheet, and we have to solve for a couple of the numbers here. Then they tell us the distribution to owners, what the beginning balance was, and the accumulated adjustments account. Notice it's what they're calling retained earnings on their balance sheets. Their ordinary business income for qualified business income, and the wages for qualified business income. All right, and we're supposed to prepare Form 1120S and Schedule KS for both of them. Or Schedule Ks, sorry, for both of them. And we're going to do it basically by hand on the IRS forms. Now, you can print this out and handwrite it if you want to do that, and then scan it and upload it. I'm going to type it on into here. These are typable PDFs, or however you say that. Editable. Is that a word? I don't know. Anyway, so 115. Having issues, sorry. 115, 2012 is that one. Their business activity code, I think they gave it to us somewhere. That's where I saw it. Maybe they did not. So we'd have to go look that up. It's for a candy company. And I will just tell you what it is. 3113300. All right, name Premium Incorporated. 2005, 16th Street. Cut and Shoot, Texas. Okay. And employer ID number 11 1 2 3 4 5 6 7. They were also incorporated on January the 15th of 2012. And their total assets you can find down here on the balance sheet, 844,422. All right. Is the corporation electing to be an S Corp at the beginning of this tax year? We just don't really even need to do all that because It already is an S Corp, so no, we don't have any changes. Enter the number of shareholders. There are 2. And we don't need to check anything on line J. All right, so now for the income. All right, gross receipts. 2 million. That's a lot of candy. 2,410,000. 2,410,000. All right, then we have to do the cost of goods sold. All right, so cost of goods sold, they didn't calculate for us, but it's beginning inventory plus these direct costs minus the ending inventory. So it's let's see. I think I can add it up. So cost of goods sold equals the beginning inventory plus the direct costs minus the ending inventory. So 9607 plus 203,102 plus 2078,143 plus 249,356 minus 3467. And that all equals 736,741. All right, so gross receipts minus cost of goods sold equals gross profit of 1,673,259. And it just comes on down to here. 673,259. All right, then compensation of officers, that was 150. Salaries and wages were 442,103. Repairs are 206,106. Depreciation goes down here a little further, 15,254. Interest expense, right here, 35,222. Rent, line 11, 40. Taxes and licenses, 65,101. Where am I? Charitable contributions. All right, interest income, charitable contributions, and these penalties, those are all reported separately. All right, advertising expense is 20. And other deductions, 59899. One, two, three, four, 5, 6, 7, 8, 9. Okay, so then my total deductions, you add those up, and they come to 103,3685. And then subtract that, the 1,673,000 minus the 103, and your net is 639,574. All right, we don't have anything in the next section. All right, because we don't have any tax. We don't have any built-in tax or any excess net passive income to tax or LIFO recapture tax. So we don't need to worry about any of that. So our estimated amount I owe, I'm just going to put a 0 there. Sorry. Okay, so scrolling on down, they use the accrual basis of accounting. Their business activity is food processing, and their actual product is candy. All right. And then at any time during the tax year, was any shareholder of the corporation a disregarded entity, trust, estate, or non-similar person? Nominee or similar person, I'm going to say no. Owned directly at any time of the tax year, did the corporation own directly 20% or more, or own directly or indirectly 15% or more of the total stock issued and outstanding of any foreign or domestic corporation? No, they did not. And they also did not own anything for Part B. They had no restricted stock. Actually, all these things are just no's. All right, Schedule B. During the tax year, did the corporation have any non-shareholder debt that was canceled? No. Subchapter S was not terminated. They did not make any payments that required a 1099. They were all Levy 2. And then no. Okay, so now here we get to the Schedule K. Okay, so first line of the Schedule K is your ordinary income, and that was what we calculated up here. So 639,574. All right, interest income, line 4 here, that's this interest income up here. So 100,000. All right, that's it for that. All right, then down here in deductions, we have charitable contributions. They were 20,000. And then you keep on scrolling, and then you get down here that has items affecting shareholders' basis. They have non-deductible expenses. That's the payroll penalties. Those are not deductible. But it does affect their basis. All right, and then we have other information, and investment income is that same 100,000 of interest income. Okay, so this income or loss reconciliation, you combine the amounts on line 1 through 10. All right, so combine those two, and then subtract the 20,000. You should get, let's see, let's double check that. $639,574 plus 100,000 minus 20,000. Unless you don't get to do the 15,000 doesn't come out. But you combine those ones I did, and you get 719,574. All right, next section is the balance sheet. So they gave you the beginning of the year, so you just need to copy those numbers in. Say prepaid expenses are other current assets. It's 138, 203, 84, 235. Land, 2,000. I'm gonna go back to this number. 138,203 minus 84,235. 53,968. 47,840. We just double check our numbers. 93,100 plus 96,07 plus 83,33 plus 53,968 plus 2,000. 214,848. All right. 214,848. Okay, accounts payable 42,500. Note payable less than a year 4,500. More than a year 26,700. Capital stock 30. And retained earnings 111,148. And it should add up to 214,848. Okay, then the end of the year, we don't know cash yet, but account receivables are 123,104. Inventory 34,667. Prepaid 17,582. Buildings 185,348. We don't know accumulated depreciation, but I do know what depreciation expense was. So I can look up here at depreciation expense. It was 15,254. Guess I can't add a note. Okay, well anyway, it's the 15,254 plus what they had at the beginning of the year, 84,235. So 84,235 plus 15,254. 99,489. 85,348. So 85,859. Oops. 85,859. All right, my land is still 2,000. And they told us that the total was 844,422. They didn't tell us what cash was, but now I can back into it, right? I can do the 844,422 minus 2,000 minus 85,859 minus 17,582 minus 34,67 minus 123,104. So my cash is 612,410. I have a lot of cash. 612,410. Okay, so accounts payable 72,300. Note payable less than a year 2,100. Note payable more than a year 24,300. Capital stock 30. And then I don't know retained earnings. I can figure it out a couple ways actually. Okay, I know it's got to balance out, so I can do the same thing I did up here and do the 844,422 minus 30 minus 24,300 minus 21 and minus 72,300, and that gives me, if I do it that way, 715,722. Okay, but I'm also going to double check that. So, because we have to reconcile these two numbers. Okay, so then the M1 takes the income per books with the income per return. So they told us that the net income per books, somewhere they give it to us. Oh, right here. Book income, 704,574. Okay, so income included on K1 that's not recorded in the books. We don't have any of that. Expenses recorded on the books that's not including K1. That is the 15,000 of penalties. And you can just do the other. Well, actually, I'm just going to type in penalties. All right, so you add those two numbers together. That gives you the 719,574. And then we don't have anything on this side. We don't have any income recorded on books that's not included in Schedule K1. And we don't have any deductions. So 719,574. And you might notice that that number ties to this number up here, 719,574. All right, then we need to reconcile. Basically, we're reconciling retained earnings. All right, it's accumulated adjustments account. So at the beginning of the year, they had that 111148. It's also over here, 11148 and 111148. Right, their ordinary income is the number that's up here at the top that we calculated. Oh, well, not top, first page. The 639,574. $639,574. Then we have other additions. That's the $100,000 of interest income. Then we have other reductions. This is the $20,000 of charitable donations and the $15,000 of penalties. Right, so we, sum this up, and the sum of that is 815,722, and then they distributed $100,000 to shareholders. You subtract that out, and you get 715,722, and that should tie to this number right here, and it does. Okay, and that's it for the Form 1120. But now we also need to do the Schedule K. Okay, so corporation's number 111123450. The corporation's name is the Premium Inc. 105 16th Street, Cut and Shoot, Texas 77303. We are e-filing. Total number of shares at the beginning and end of the year is 2, yes? But oh, I don't know the number of shares. Do we not know that? I don't think it really told us. I just know there's 2 shareholders, and I know they share at 70/30. All right, so then we're doing the first guys, John Parsons. So he is 1, 2, 3, 4, 5, 67, 81. John Parsons. 5607 20th Street, Cut and Shoot. I have to go check that. Texas 77303. Here's their addresses down here. Current year allocation, he gets 70%. Okay, so now remember, this is their share of stuff. So ordinary business income, you have to refer back to the K1 or to the Schedule K. Where's the Schedule K? Right here. All right, so that's that 639,574, and he gets 70% of that. So 639,574 times 0.7. He gets 447,702. Oops, I'm in the wrong spot. 447,702. All right, interest income was that 100,000. He gets 70% of it, so 70,000. And when I say he gets it, he doesn't necessarily get the cash. He picks it up on his tax return, is what I'm saying. All right, so let's see. Qualified royalties, capital gains and losses. We didn't have any of that. We didn't have other income. We did have some other deductions. All right, it was the charitable deduction. So it was 20,000 and he gets 70% of that. So 14,000 there. Items affecting shareholder basis. And actually it comes from, if you look at Schedule K, everything ties. All right, so let me go to Schedule K. So 12A is the charitable deduction. So over here, it's other deductions, line 12 and A. All right, then we've got this items affecting shareholder basis, and it's C, 16C. You see that? So when you come over here, it's 16 and then C, and it gets the 15,000 times 70%, so 10,500. And then 17A, that's other information, 17A. So right here, other information, A, and that was the 100,000 times 70%, so another 70, it's not another 70,000, it's 70,000. And then keep scrolling. Oh, I don't know what there, sorry. Okay, so we also need to put down here, I can't find it on the form, but there's obviously a letter V and a letter W, and this has to do with this QBI information and his share of that. That's got to go on his tax return. So he gets 70% of that 639,574, which is 447,702. It rounds. And then he gets 70% of this 795. And that's 556,644. All right, and then you basically do the exact same thing for the other guy, but he gets 30% of these numbers. So y'all can do that one on your own. So you need to download these, save them, and then upload them in Blackboard. There's an assignment option for them.